Hi there, welcome to Kneppy Invest. Time, of course, to do a video on A2 Milk because they've just released their full year results on the 29th of August and the share price has bounced 15%. In fact, on the day they released the results, the 29th of August, the overall market was down 2%, yet A2 Milk share price rose almost 10%. Last time I looked at A2 Milk or did a video on this company was back in October 2021 when there were rumors about takeover or a possible takeover from Nestle, which probably would make sense. However, that takeover never came to fruition. They were just rumors. And we've just seen share price of this company just really go sideways over the past 10 months. I think we've all been waiting for some good news from the company. And it does look like the full year results for financial year 22 will possibly or is possibly the good news we're all waiting for. So I'll take a look at these full year results from the company. Now, these results were good in my opinion. It does look like the company is turning things around. Now, I'm not completely enamored with A2 Milk just now because of one simple thing. Now, their growth strategy moving forward will be highly dependent on China. And I just want the company to pivot away from China and relying on China. So this over-reliance on China has been a problem with A2 Milk in the past. And the way I look at China, it's like a spoilt brat. And whenever a spoilt brat doesn't get their way, they will have hissy fits. And China has shown this in the past with Australia and Australian companies. And those Australian companies that have been affected by this spoiled brat mentality from China have pivoted away from China. The main company I'm thinking about is Treasury Wines, and I think Treasury Wines is much stronger because of their pivot away from China. Now, Treasury Wines really had no option apart from pivoting away from China because of what China was doing to Australian wine. So I just wish that A2 Milk strategy in the future was not completely moving away from China, but also looking at other markets in the world. Now, they have focused also on America. I think that's a good plan for the future, but I also just wish A2 Milk will start to focus on other markets in the world, not just China. Now, before we have a look at A2 Milk's full year results, they did also announce a share buyback up to $150 million, New Zealand dollars, and that's over a 12-month period, not exceeding 5% of the company's shares. And this comes back to one of the most important decisions a company's management have to make, and that is capital allocation decisions. So when a company has a lot of cash or is generating a lot of cash in their operations, they have to decide what to do with that cash. So they can do dividends. They can pay out dividends to the shareholders, acquisitions, research and development, or maybe a share buyback. And A2 Milk have decided to go down the share buyback route. Now, typically, a share buyback is most useful and beneficial to shareholders if the company is undervalued. So hopefully, A2 Milk management think right now the company's valuation is lower than it should be. That's the only really way a share buyback makes sense, in my opinion. And if it does make sense, and if the company's valuation is undervalued, this is the best capital allocation decision the company's management can make. Now to the charts for A2 Milk. Typically, I like to leave the charts towards the end of the video. So I'm just going to show you one chart now and look at the longer term chart later in the video. But this is the daily chart going back to June of last year. And in May of 2021, that was the last profit downgrade the company did release. And you can notice between June and October of last year, there was a lot of volatility in the share price, which is quite normal when you see a share price decrease from $20 to $5 in about 9 months of trading on the back of 4 profit downgrades from a company. In fact, A2 Milk share price was trading between about $5.20 and $7.50 over that 4-month period. In October, the last time we did see a significant rally in this company's share price was on the back of those takeover rumors that did not come to fruition. And since those takeover rumors, share price of this company fell from $7.50 to actually less than $4 in May of this year. But since May and over the last 3 months, it does look like the share price of this company is wanting to turn around. sentiment is starting to shift. Some of the reasons behind that shift in sentiment is on the back of the news from Bubs selling their infant formula into United States, and probably a lot of people were thinking A2 milk would go down that same route. But the most powerful reason and most important reason for a share price of a company to rally is on the back of good financial news from the company, in particular profit upgrades or good financial results, the full year results or half year results. And that is exactly what has happened to A2 Milk on the 29th of August and the 30th of August. Share price has rallied 10% on the 29th and then a further 6% on the 30th. And the share price is moving towards a breakout position. If the share price can get above $6 and stay above $6, that would be confirmation of a breakout, because there is that horizontal dash line I have at around about $5.90. We did see the share price try to rally in February of this year on the back of half-year results, but that rally was unsuccessful, and the high on the back of that rally was around about $5.90. So if the share price can get above $6, that would mean the A2 Milk share price is at least a 6-month high. Another dash line I have at the top of this particular graph is at about $7.50. $7.50 is a pretty strong resistance level, because that's the high we saw the share price get back in July and October of last year. And if the share price can get above $7.50, that would be a multi-year high for A2 Milk. So A2 Milk does look like it's moving in the right direction in regards to their business, and it looks like the share price is wanting to meet those increased expectations from the company's management. Now onto the results for A2 Milk, financial year 22 results, and these numbers are in Australian dollars. This company actually reports in New Zealand dollars because it is a New Zealand company. Revenue, 1.3 billion. So a lot of revenue this company does get from selling their products, their milk, infant formula, and all those sort of things. Profit margins probably not as high as I'd probably like to see at this point in time, but I think profit margins will eventually increase. Maybe not to the state we saw profit margins before COVID-19 and before these problems the company has. But financial year 22 profit, 110.6 million, operating cash flow, 183.8 million, and earnings per share at 14.9 cents. Now, the current share price at the end of trading on the 30th of August, $5.73. That gives a market cap for A2 Milk of $4.2 billion. Now, just comparing the earnings per share, 14.9 cents, and the share price, $5.73, straight away you can see that the PE ratio of this company on these results is around about 35 to 40, which does seem high. So there is a lot of future growth already priced into A2 Milk. So that is one little bit of a concern I do have moving forward for this company. Now I'm just going to show you revenue and operating cash flow history for this company since 2015 when they listed on the ASX. And this was a phenomenal growth company between 2015 and 2020. And to be fair with you, the problems that A2 Milk have experienced is not structural. It is something they were not able to control. My only problem with A2 Milk's management is they were not being conservative enough. So they were being overly optimistic in how quick A2 Milk could rebound. And the company did not rebound as quick. And that's why the company had to issue 4 profit downgrades in about 6 or 9 months. But if we look at the revenue growth over time, this company has been growing at a pretty good rate. In fact, over the last 7 years since they IPO'd on the ASX, the company has grown their revenue at 37.9% per year. Over the past 5 years, only at 20%, and over the past 3 years, 1.5%. So the only thing to take away from this graph is this company has experienced growth. They've had a hiccup in financial year 21, and we did see revenue fall from 1.6 million to 1.2 million. But it does look, based off financial year 22 numbers and expectations over the next 3 years, that revenue will continue its upwards growth trajectory. Maybe not at the same rate as we saw between 2015 and 2020, but this company is now back in a growth phase. And if we turn our attention to operating cash flow, now over I haven't got a compound annual growth rate over the last 7 years because back in 2015, this company was operating cash flow negative by more than $7 million. And you just see that significant growth in operating cash flow between 2015 and 2020. It went from being operating cash flow negative $7 million to being operating cash flow positive almost $400 million in 2020. And no significant problems in financial year 21. You can see a significant drop off in the operating cash flow from 400 million to 83 million. Now we're back up to 183.8 million. Still significantly lower than financial year 2019, and that's because of margins. So moving forward, I expect revenue to keep on growing, but also margins to grow as well. And with growth in revenue being probably around about 10%, we'll say between 8 and 10%, and an increase in margins, that means profits moving forward will be growing at a significantly higher rate than the revenue growth. And hopefully, profits can grow between about 12 and 17% on the back of growth in margins in this company. Now onto the cash flow statement. And when I do open up a company's financial results, I go straight to the cash flow statement. Sometimes I have a cursory glance at the revenue just to see if it has grown over the past year. But the main thing I'm looking for in the cash flow statement is receipts of customers growing and cash inflow or outflow from operating activities. And for A2 Milk, the company has increased their cash flow in operations from 89.4 million to 203.8 million. That seems really impressive, but there are reasons behind that really impressive growth in cash inflow in operations. And they talk about in the commentary, there's two main reasons for that significant increase in cash inflow. One of the reasons is driven by, or largely driven by, favorable movement in net working capital. I'll have a look at that working capital changes in the next slide when we take a look at the balance sheet related to fourth quarter financial year 22 increase in brand investment and inventory orders combined with delayed invoicing and payments processing in China. The other thing to take a notice here is taxes paid. So in financial year 21, they paid 97.8 million in taxes. This year, only 23 million. So significant changes in taxes paid. They also mentioned that in the commentary, significant decline in taxes paid reflects refunds received and deductions for financial year 21 stock write-off claimed during the year. So that's two reasons why there's been an impressive increases in cash inflow from operations in financial year 22. And in fact, I actually didn't include the balance sheet in this video. Instead, I've included note D4, which is a reconciliation of after-tax profits with net cash flows from operating activities. Now, this note D4 looks very similar than the cash flow statements we see that American companies release. They start with the profit for the year, work their way backwards or forwards to get to the net cash inflow from operating activities. And the reason I like these sort of cash flow statements or these notes in the financial statements is you can see the effects of changes in working capital in the cash inflow or outflow from operating activities. For example, with A2 Milk, you start with profit of 114.7 million. Then you take into account deferred tax, depreciation and amortization, and then changes in working capital. And that's how we get to a cash inflow of 203.8 million. And what I like to look at and really pay close attention to is changes in working capital. What is the changes in inventory like? What is the changes in receivables and payables? And the big difference for A2 Milk, apart from the deferred tax, which went from being negative 25.8. So anytime you see numbers in brackets, that's a cash outflow. Whenever you see numbers not in brackets, that's a cash inflow or like a cash inflow. So deferred tax last year was in brackets 25.8. This year's at 27.4. So that's beneficial to the company. And that's why net cash inflow for the year is a little bit higher than probably we should expect. But the big change here for A2 Milk was trade and other payables. Last year, it was negative 15.8. This year, it's positive $95 million. That means trade payables for A2 Milk was almost $100 million higher this year than it was last year. That means they owe some companies $100 million that they've yet to pay compared to last year. So they might pay that in the first few days of financial year 23. So that really does help how the net cash inflow from operating activities looks this year. So I do like to take into account changes in working capital when I do look at the cash inflow or outflow for a company in a financial year. Now, onto a particular slide in A2 Milk's presentation that I really like, and this is in regards to longer term targets for the company. So, not only did they give a financial year 23 targets in regards to revenue growth, but also longer term revenue targets for financial year 26. And that target is $2 billion. So, this year it was 1.45, and they hope to achieve a revenue of over 2 billion New Zealand dollars in financial year 26. And they actually broke it down in their market or categories. So China label, English label, China and other nutritionals, emerging markets, Australia, New Zealand, and USA. They hope to increase revenue significantly over the next 4 years or so. And they also have a non-specific risk here. So they're not going for sort of the blue sky target. They've also included a bit of a risk. So they're being conservative with this target. And I really like that conservative approach, because something bad will happen over the next 4 years to one of their markets, one of their categories, and potentially it will not grow as strong as they hope. Potentially also some of these categories will grow stronger than they're expecting. But I like this conservative approach. So $2 billion in revenue by financial year 26 is a conservative approach for this company. For financial year 23, they are expecting high single-digit revenue growth. And if they can increase their margin, that would mean profit will be growing in double digits. Now onto some valuation metrics here, looking at PE ratio, price to sales ratio, and price to operating cash flow. PE ratio 38.4, which does seem a little bit high. That's the one little hesitant thing I do have about A2 Milk right now. There's a lot of expectations already built into the share price moving forward. So the market is expecting A2 Milk to grow quite well from here. That's with a PE ratio of 38.4. But I've already mentioned they can grow their revenue, grow their margins, and we're going to see significant growth in their profits moving forward. I'm just hoping the market isn't expecting the company to grow like it did between 2015 and 2020. Price to sales ratio 3.2 and price to operating cash flow at 22.9 is also pretty high for a company that has experienced some problems over the past 2 years. So at this point in time, you can't say A2 Milk at a share price of $5.73 is undervalued, possibly even fairly valued, particularly if they can't or won't experience the growth the market is hoping for in the next few years. Now onto the longer term chart, and this is the weekly chart going back to 2016, and this company was all the rage from 2016 all the way through to about May of 2020. Even during the COVID-19 financial panic, the share price of this company was hardly affected at all. In fact, the share price decreased towards the end of 2019 more than we saw a decrease in March of 2020. Share price did reach a high of $20 back in June, July of 2020, but has fallen significantly since then. Can we see the share price get back up to 2020? I do think we're going to have to see return to really good growth for this company. I think we're going to have to see profit upgrades from the company in the future before we see the share price even approach $20. But the company is on its way. The first step, we'll say baby steps first, and then the company can maybe see successful growth in China or return to successful growth in China, America becoming profitable, and then the company expanding to other markets around the world. They've given up, or seem like they have given up in the UK. They gave up there a few years ago, but I'd like to see the company try to expand their operations into other markets, selling the products over there. I'm not sure if that is on the agenda for the long-term future, but that is something I would like to see the company starting to talk about, that is a possibility down the line. So is A2 Milk back? I think the company is starting to move in the right direction. This is really important. 2 really bad years, 4 profit downgrades in about a 6 to 9 month period ending in May of 2021. I like to see some profit upgrades from the company. I like to see the company's guidance expectations for financial year 26 to be way too conservative, and they completely beat that by a significant amount. Instead of $2 billion of revenue, maybe 2.6, 2.8, $3 billion of revenue. That would be awesome for this company and its shareholders. But because the company or the market has been spooked by this company in the past, I think the big company has to build trust again. But right now, the valuation of the company does seem to be a little bit too stretched based off their financial year 22 results. And the market is expecting some really good growth in financial year 23, 24, 25, and 26. And if we get that growth, I do think the share price will continue to grow from here, particularly if they beat those expectations. If you have any questions about A2 Milk, if you have any questions about the company moving forward, I'd love to hear from you. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.